Finance. I'm Jen Nicholson.
And I'm Blair Cook. Yesterday we talked about some of the users of financial statements.
Today we are going to identify and talk briefly about each statement.
Of course, the balance sheet is the most important statement, and therefore the one we're going to discuss first.
Actually, I think the income statement is more important, so we will talk about that first.
Okay, you win this time. Remember, there are other statements as well.
Of course, we will talk about the cash flow statement and the statement of changes in equity.
Today will be a very high-level overview of each of these statements and how they link together.
We're going to talk about each statement in detail in later episodes. Are you excited? I know I am.
You're such a geek.
I think we both are, actually. So let's get started with the most important statement, the income statement.
The income statement shows what operating activities and transactions occurred in a company during a period of time. Usually a fiscal year, which can be the calendar year, January 1st to December 31st, or any 12-month period in the year.
Most companies prepare statements for their internal use monthly as well. This is important to track how the business is doing and compare month to month and year over year.
At a high level, the income statement consists of revenues minus expenses, which equals net income. Revenues are the sales for the period being measured, and expenses are the costs associated with earning those revenues. Net income is hopefully what you have left at the end.
Sometimes a company will have a net loss instead if it has more expenses than sales.
Always better to have income.
For sure. The income then carries over to the balance sheet as part of shareholders' equity. Okay, Blair, now we can cover your beloved balance sheet.
The balance sheet shows what the business owns and what it owes at a specific point in time. So whereas the income statement is shown for the period ended, the balance sheet is at a specific date.
So where the income statement shows the results of operating transactions over a period of time, the balance sheet shows what the company owns and owes. The difference is the residual, known as owner's equity.
And what the company owns are the assets, and what it owes are the liabilities. And as Jen said, the difference is owner's equity. Now the accounting equation is assets equals liabilities plus equity.
Of course there's an equation involved. It is accounting. We will talk more about the definitions of the various parts of the balance sheet in our next episode.
I really can't wait. The next statement we will discuss is the cash flow statement, also known as the statement of changes in cash flow.
Cash is king. Understanding how much cash a business has, how the balance has changed over a period of time, and where the cash has been used and come from is very important.
The cash flow statement starts with last year's or period's cash balance and is then reconciled to this year's balance by looking at all the sources and uses of cash from operating, investing, and financing activities.
The cash flow statement is tough and can be very confusing to reconcile. I know I've never liked it.
It really shows you that you've captured everything, because if you haven't, it won't balance.
And as we accountants know, it is all about balancing.
Absolutely. And finally, we have the statement of changes in shareholders' equity. Now, this is not typically covered in a lot of detail in introductory accounting courses, but I personally feel it's very important.
This statement shows the changes in the equity account over the period. It starts with beginning equity and then reconciles all the activity through the year to get to ending equity.
Yeah, and this is where the income flows through, but it also shows how much has gone out in dividends or owners' drawings, as well as whether there are any inflows from owners through their contributions.
You can learn a lot about the health of the business by understanding this statement.
We will learn more about this statement in a later episode.
Okay, well that's all we have for now. You have an overview of what financial statements are and how they link together.
In our next episode, we will talk more about my beloved balance sheet.
I am letting him go first this time.
Until then. To the balance sheet as part of shareholders' equity.
You missed yours. Yeah.
Sorry, that's swearing, right?